Hey there, it's Dave with House Flipping Spreadsheet, and this is a quick video tutorial on the new accounting workflow and new project budgeter. So I'm just going to walk you through just the basic steps of using our new accounting functionality so that way you can get set up and start tracking all of your project expenses and managing your budget. So right now you're looking at the accounting workflow inside the House Flipping Spreadsheet. The first step in the accounting workflow is to set up your account information. So this is where you can set up your vendors. So you'll just want to set up your company names here. These company names will be used on the expense tracker to track your expenses by each vendor on the project. And then you've also got your account setup. So account setup is where you can set up your bank account, your checking account, credit card account. This information will be used on the expense tracker to track all of your expenses by each account. So if you want to track to see how much you spent on a particular credit card account, how much you spent out of a bank account, or how much you paid maybe as an expense reimbursement account for an individual, you can track that all here in your account section. And then categories, this is where you can set up all of your different categories, your income categories and your expense categories, which feed over to the expense tracker to track your expenses by each category. So once you get that set up, you can move over to the budgeter. Now the budgeter is a new tool that we've developed to help you manage all of your budgeted costs, what you've spent to date, and then forecast out your costs so that way you can forecast your project's profitability. So the budgeted column is where it feeds over the values from your initial deal analysis. So all of these values in the budgeted column feed over from the rehab analyzer. So if we click over to the rehab analyzer, if we had initially analyzed a deal, all of those values will be pre-set up in the project budgeter as a budget for the project. So we've got our purchase price here, we've got our buying costs, holding costs, selling costs, financing costs, and then we've got our repair costs here. And then it's going to basically calculate our profit. So our resale value, we're projecting we can resell it for 165. Our total project costs are 140,000 on this project, and so we're forecasted to make $24,750. The spent to date column is where you can track your actual income and expenses. So right now we're looking at the income tracker. We've got 175,000 in here as actual income once we resold the property. So that will feed back over to the project budgeter in the income section to forecast against what you were initially projecting for your resale value. And then we have our expense tracker. If you click up in the upper left hand corner, this is where you can calculate all of your detailed expenses for the project. So you can see you can just input a description or memo. These are the accounts that you initially set up. So again, you can track all of your expenses by your checking account, your credit card account, Lowe's, Home Depot credit cards. You can also track by your vendors. So again, these are set up in the vendor setup page. And then you can track by your categories. And then all of this information and costs is automatically sorted and put onto back to the project budgeter, as well as our different expense reports that we have that populate this information into a printer friendly format. So if we go back to the project budgeter here, you'll see that these values are now being populated into our spent to date or income to date column. So right now our purchase price, we're projecting that we should purchase it for $57,000 in our initial analysis. Well, we only paid $52,000. And we're 100% complete with that item, so we're actually under budget by $5,200 on our purchase. And then our buying costs, we've spent to date $1,000, $1,060. Our initial budget was $1,000, so we're actually over budget on our buying costs. We haven't spent anything to date on holding costs, so we're not necessarily forecasting that just yet. So we're actually just using our initial budget items for our projected. And then if you go down to our repair costs, demolition, we've started demolition here. Our initial budget was $1,000. We actually have spent $1,700, so we're $740 over budget. And then if you go down, you can see all of our other budgets here and what we've spent to date. And it's just basically going to forecast out the costs based upon whether it's been completed or not. And overall, it'll forecast what your profitability is going to be on the project. So right now we're forecasting that we can resell the property for $175,000. Our total project costs are going to be $139,000. So right now, that's $10,000 more than we initially anticipated selling it for, and that's $1,100 cheaper on the project costs than we initially anticipated. So overall, our profitability is $11,000 more than what we initially anticipated. So initially we were thinking we were going to make $24,000. Right now we're projecting that we'll be at about $35,000. So we're actually doing pretty good on this project. So that's a quick overview of the new accounting tools. Now, another thing to note is all of this expense information feeds into your different accounting reports here. So you've got a project budget report that basically puts everything on the project budget page into a printer-friendly format for you. We've also got some expense reports here as well. So you have an expense summary report, another summary report that puts all the information that you have on the project budgeter and expense tracker into a nice report that shows you all of the expenses that you've spent to date. And then we have some more detailed expense reports, such as the expense by category, expense by vendor, expense by account. These show you all of your expenses that are categorized by your scope of work or your trades, or by your vendor or your account. So you can see right now it gives you a nice summary at the top of what you've spent in each category. So we spent $76,000 total, $52,000 on the purchase, $1,700 on demolition, and so on. But then at the bottom it also shows you the detail. So if you want to see a detailed expense account of everything that you spent in each category, it'll show you what your buying costs were. All of your demolition expenses here are categorized, so you can see what went into that $1,700 for the demolition cost. So a lot of different reporting options, so it really helps you get organized and then put that in a nice printer-friendly format, so that way when you're done with the project you've got a final profit statement, and then you've got all your expense reports that you can give to your accountant if you need to do that. So that's a pretty quick overview of everything on the accounting side of the spreadsheet. If you have any other questions, please let me know.